This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back to Invest Like a Pro. This is Joe Rabil. The Fed seems to be not cooperating with a market that's trying to rally. We saw some improvement in the price action recently, but every single time it tries to rally, there's sellers. And I think a lot of that has to do with the fact that the Fed is just kind of changing its tune. And so as we look at the price action, you do want to know what's causing the movement. And I think it draws to a much bigger picture. And some of the things we've been talking about on this channel relates to a bigger picture, potential bigger picture reversal that's developing. And, one of the old adages from Marty's WAG is don't fight the Fed. And so I do like to bring that up just as a background. It's not something that I'm leaning on heavily, but we do want to recognize what's causing the market to reverse. So today, the market was trying to rally, and I think from what I understand, there was like a hawkish Fed comment, and market sells off. So I think we want to recognize what's causing the market movement and not necessarily react to that. But I always say it's not the news that's important, it's how the market reacts to the news. So that's how we want to look at this. So let's get into the charts with that in mind. And let's go through and look at some of these. So I like to start with this chart. This is a daily chart of the Spyder, which is going back a number of years, two or 3 years. But what is unique about this chart is it shows all the different time frame moving averages. We've got a 1 year 18 MA that's down here in purple. We've got a quarterly 18 MA that is in red. The yellow line is the 18-month line. The blue line is the 18-week, and the purple line here is an 18-day. And what I think is important to recognize is that we've got basically a trend that had been in place all of last year. Look at what was going on. We had a rising 18-week, a rising monthly line. We have all these lines rising, right? And now look at what's happened to the shorter-term lines right at the start of this year. All of a sudden, the 18 crosses down below the 40 with a vengeance. We get a rally up and fail at the 18, and immediately price goes down to the 18-month line. Right now, we held the 18-month on the first try, and we got a really good push off the low. Tried to get back above a declining 18-week, but then failed. Now, look at what's happened this week. Look at what just happened really today. Look at how we rallied up and failed at both lines, which are both declining again. I think this really increases the odds. And I'm not even looking at momentum. I'm not looking at volume. I'm just looking at these price lines that are very important. You can see over time how they act as support and resistance. But what I think is interesting here is we had both of these lines lined up together. Market tried to rally and failed at them. And I think that does increase the odds that we're going to go test this 18-month again. So I just want to make sure I kind of keep you intact with what's taking place on this specific chart. If you haven't created this chart, if you don't use TradingView, I mean, there's a couple different software programs that do it. I'm trying to get stockcharts.com to do this as well. I'm gonna actually be requesting it. But more important than anything is just realizing that when you have an 18-day and an 18-week pointing in the same direction and price fails at that, then you have to start looking at the next higher time frame for where support's going to come in. So let's go ahead and get into the 4 time frames now and look at it in our standard way. I'm going to start with a monthly chart. And what's interesting about the Spyder when we compare it to the Qs in a minute is this is still well above the 18-month line. Now, we're losing a little bit of momentum. The MACD is crossing down through its signal line, and we got extended away from the 0 line. So, there's a few things going on. Notice how the ADX has dropped down below 25, and the green DI, which is the strength of the buyers, has really dropped down pretty low. It's down into the teens. So there's a few signs of that things are slowing down on the buy side for sure, but we're still above this rising 18-month, and I think what this is telling me on a relative basis that the Spyder is holding up much better than the Qs. We'll bring up the Qs in a minute, but let's go ahead and look at the weekly chart. So if I have the monthly back up, we've still got an uptrend in the monthly. The 18 is above the 40 and both lines are rising and the price is above both lines. If we go to the weekly chart, I still consider this to be neutral. Even though the 18 is now below the 40, you've got the 18 dropping and the 40 rising, and you have price basically going sideways. And I think a real simple way to evaluate this is, do we have parallel lines to the upside, or at least two lines that are rising? If we do, then we're in an uptrend. And this goes for any time frame. If we have two lines doing this, then we're in a downtrend in that time frame. If you look at these, this doesn't really fit into either one of those categories. I would view this more like a neutral right now. What I don't like is what's taking place in the red DI. There's a lot of strength in the sellers here. And as I said, this last rally just failed at the 18-week. We have MACD crossing back down through the zero line. So there's some things we need to be worried about, I think, with what's taking place here. But you know, generally speaking, I would say that the Spyder is actually holding up better than the QQQ. Let's look at the daily chart. Because if we start to look at this, and actually let me expand this back into multiple time frames because I want to show something. So we still have this rising support area underneath. We have the weekly line starting to roll over a little bit, but look at what happened to the daily chart. The daily was trying to rally up, and instead of holding a rising 18, see this 18? It was trying to pull back to that. It broke through that, and now look at what's happened. The 18 has rolled over, and now we've failed at that line. So I like using these smaller time frames to give us more insight into what's taking place on the bigger time frames. And so this is a pretty big negative because we had an opportunity with a big strong move off the low to get this to hold the 18 and maybe to kind of linger around for a while. But instead, we've rallied up and failed at a declining 18-day, and that probably puts a little bit more pressure on this, at least in the near term. Now, the sentiment numbers, I haven't actually posted them on this for a little bit, but I can tell you this week that there are more bears than bulls again. We've dropped down into negative territory. So people are getting bearish pretty quickly again. And again, that leads me to believe that there should be underlying support and that this looks more like a sloppy bottoming process is more of what I'd be looking at. Now, when I say bottoming process, I don't necessarily mean a bottoming process that you come down here and then you start a big trend to the upside. I still think we're in some kind of a sloppy sideways range that maybe gets a little bit deeper than I'd be comfortable with, but maybe comes down to 420 or something like that. And then gets some kind of a bounce and then sort of works sideways over the next month or two. But the underlying action, when I go and look at the individual stocks, continues to deteriorate and has me worried about the way this is going to play out. What I said on the monthly chart is that I was looking for a distribution phase to take place, and we still don't have that yet. I mean, if things just drop from here, I really wouldn't consider this a distribution phase. I'd like to see this go sideways a little bit more and create a little bit more of a phase where we had a period where sellers were really kind of getting out. Big money was trying to exit. And then when we break the 18-month, we actually do it with what I would consider to be a flattening line, where if we flatten that line while we break it, then there's a pretty good chance of follow through. So that's kind of where I am with that right now. I don't like the look of the short-term pattern, and we can see what's taken place here. We tried to rally up and then came right back down through the moving averages. We had no upside momentum really to speak of, and now red DI is breaking out to a new high, sort of confirming this down leg. And again, I think there's a better test coming of the 18-month, and maybe even getting down into these lower areas for the near term. Let's look at the QQQ though, because I think one of the things that I think is key is that the 18-month is not holding. So we've had two chances where we've been below and now we've closed above 2 months in a row, and now we're back below it again. I mean, we're running out of time in this month. If this can't get back up and close above the 18-month line, then you sort of have to assume that this is going to roll over a little bit more and put a lot more pressure on this whole pattern. So it scares me a little bit the way this is playing out. Now, when we start to look at the weekly chart, this is a lot more definitively negative. You see how those lines aren't really flat and narrow together? You've got a declining 18 below a declining 40. This line is actually declining now, and we just failed. We went inside. Look at the pinch play. You notice how MACD on the Spyder was more like right around the zero line. This is clearly a pinch play to the downside, and we have strong ADX taking place. If we go and look at what's taking place on the daily chart, we had the down move and we've tried to get a little bit of a rally. Look at this hourly low. We had a down leg and then we got an opposing trend trigger here. So if you're trading and you're using some of the tactics from my book, this was a pretty good setup here as this broke down through this line as a trigger to the downside. So anyway, you want to keep all these things. Bring up your charts, looking at them all four at the same time, and see if you can't get some setups take place. If you want to look for trading plays, that's how you'd go about doing it. Looking for confluence amongst these time frames. Go ahead and post any questions or comments, and we'll see you next time.